Now, again, we have a lot of earnings this week, and we've got Alphabet going after hours here, and it's dropping dramatically. Again, I told you we're still at risk of getting another leg down, but I don't think the January low is going to be taken out. I'll show you the support levels I'm looking at. Important earnings, but really important ones here. Alphabet, we have AMD, we've got Snap in after hours. Next Thursday after the bell, we will get Amazon. So again, important things going down here. Dow stocks going on. Tomorrow morning we got Disney, S&P stocks, and some tech going on here. So again, Magnificent Seven stocks. Let's take a look quickly at Alphabet, AMD, and Snap. We've got kind of a mixed bag because we got Alphabet dropping 7% as they miss on earnings. We've got Snap soaring on earnings. So again, kind of interesting. We'll take a look at them quickly here. Alphabet missed on earnings. They missed on revenue, but they beat on earnings per share. They missed on cloud revenue. And here, about 30 minutes after the close, we're down 6.66. Uh-oh, that's a diabolical, diabolical number there. Anyway, so we are down 13, almost $14 on Google in after hours, down just under 7%, or I should say Alphabet. Quickly, we have Snap beating on earnings, and currently that is up about 12.25%, just under 12.25% here in after hours. It was up 3.85% during the session. So Alphabet down, Snap up. How all that figures into the NASDAQ by tomorrow's close. Now, AMD beat earnings, and they had a strong forecast going forward, but the stock is still down. Again, still concerns about competition. Currently, they are down 5% in after hours, just over 5% now. So again, we'll be watching after being up 4.58%, giving that back and then some. So we'll be watching as if this is a drag on the NASDAQ. This is the 5-minute chart of NASDAQ 100 futures. It is the NQ. It is dropping off of the highs right after the bell. It began to close, and it's down a little bit off of that. Again, Alphabet, AMD, and Snap earnings all being factored into that. And again, AMD is down, Alphabet is down, and Snap is up. So we'll be watching to see how we close. But we could see a bigger pullback on the S&P, and the NASDAQ is at risk, again, of going back and filling the gap from the election at 20,227. We take out that January low. We'll be watching the NASDAQ closely. Does it stop making new highs? But right now, pulling back off of this session highs with the earnings in after hours. Here's the E-mini futures of the S&P 500. Again, the market closed. We got this bar right after 1 o'clock closing there. And again, we've turned down somewhat here in after hours. So again, we're going to be watching. Watch the video all the way through. I'm about to show you some key support levels on the S&P 500. Really interesting charts that I want to share with you. To get those earnings in here right at the beginning so you can know, hey, this could impact the market tomorrow. Plus, again, later in the week, we've got Disney and we've got Amazon, and could also impact the market. Now, we had a move of greater than 10% on the VIX. The VIX was predicting that we would have a bounce or a bottom on the S&P 500 today or tomorrow. We got it. We had a bounce here, possibly a bottom, validating the Monday low as a bottom. There's still risk of taking that level out and getting a larger Fibonacci retracement. I'll show you, and you can make up your own mind what you think as far as the support levels directly under Monday's low, and I'll show you very important things. The Dow was up 134 points, up 0.30%. The S&P 500 was up 0.72%, up 43 points, still holding above, getting back above that 6,000 area, and we went back to fill the gap at 6,040, which was our tariff sell-off gap. So we've now filled the DeepSeek gap and the and the tariff gap. And it looks like the reason for the AMD sell-off is the data center revenue. They missed on that, the AMD stock, and that's why they're down 5% in after hours at the moment. We'll see what they look like by the close. AMD impact, NVIDIA and the NASDAQ and the whole tech sector. So we'll be watching. NASDAQ was up 1.35%. The Russell was up 1.41%, the best performance of the day of the four. The VIX was down 7.57%, dropping back below 18. But the VIX correctly predicted the rally that we had today, and the VIX was predicting we'd either get a bounce or a bottom. The headline here about traders looking past Trump tariff shakeup is true. The market got more bad news about China today and the tariffs. The market just kind of shrugged it off, and we had this rally to go back and fill the tariff gap. Be more volatility, as I've said. Again, this is a preview of coming attractions, volatility surrounding the tariffs, because again, we're likely going to get more going forward. The uncertainty surrounding that, because we have the story now that China is doing retaliatory tariffs. China's retaliating with additional tariffs up to 15% on selected imports starting on February 10th. Now, February 10th is this coming Monday. Now, the White House reported that there going to be this phone call between China's president and President Trump. Apparently, the call got canceled. I haven't heard if they have rescheduled that or if they're planning on something else. I'm not sure if it was canceled by China or the White House. Looks like it might have been Trump that canceled the phone call. It was scheduled and apparently it was canceled, but that's from Reuters. I mean, they're the ones that gave us the fake news last Friday that the tariffs were being delayed for a month, so you never know what to believe. So again, Trump in no hurry to talk, and apparently there was a meeting scheduled and it got canceled, so we'll see what happens. According to Barron's, the White House is saying that a call will take place, but at an appropriate time. And the headlines all over the place is that Trump is in no hurry, so maybe he does not want to come off too anxious. Who knows? We'll see. Again, the tariffs are a bargaining chip. Again, I'm not a fan of tariffs, but a lot of them are out of whack. You go over to Europe, you don't see American cars over there. There's a 10% tariff on American cars. The tariff on foreign cars going into the United States is something like 2%, 2.5%, something like that. So I mean, it's kind of out of whack, some of these tariffs with other countries. See what happens with this developing story here with China now slapping on new tariffs on the United States come this Monday, February 10th. So we'll be watching that. This, again, still give us volatility. And then we've got the earnings. We've got the jobs report on Friday. Again, the experts are now coming out. The economists, the Fed's not going to be able to cut. The door's shutting now because of the tariffs, and we're going to have this trade war. Narrative out of the media is we're going to have this big trade war. Lasted with Colombia, with the coffee issue there. Little joke. I like Colombian coffee myself, but Colombia caved in about 10 minutes. It didn't create a trade war there. Now we have Mexico's president and Justin Trudeau both caving in about a day and a half. I told you over the weekend they were going to make concessions to the United States. They want to sell their products here. Both of them have massive exports. I showed you those figures to the United States. Powell's all worried about inflation, really concerned ever since the election about the economy overheating and the tariffs and all the rest of it. And I told you again yesterday, the experts are telling us, they're shutting the door on the rate cuts. And now here, another article that the Fed could find itself in a catch-22 if the tariffs spike inflation. The tariffs do not spike inflation. Rising prices, some rising prices is not inflation. Money supply increases. Again, everything rises. That's inflation. All prices rising, not just some. Concerns about a spike in inflation and slower growth. That is true that, again, tariffs will slow growth to some degree, but we've had times in history where we've had major tariffs in place. And it didn't slow growth. Tariffs of the 1920 didn't slow growth. Didn't create inflation either. And then the Tariff Act of 1930, I believe it was 1930, 31 right there. I believe it's 30. That didn't create inflation. We moved into the greatest deflationary period in history during the Depression, and yet they had massive tariffs. Did it create all this inflation? Absolutely not. Again, there's this myth that tariffs create inflation. Now, it can slow growth, but that doesn't mean that if you have tariffs, you're going into recession. We had the recession indicators trigger long before the tariffs were an issue, long before the election. The was triggered, and then right after that in December, the very next month, we had inverting of the yield curve. These signals triggering recession. The tariffs ever came into play here 2025. So just keep that in mind. This is why I say we have the tariff boogeyman that, again, there's this big scare, and I think it's going to create an inflation freakout or be part of the equation, cause the market to peak. But I do think we're going to get one final climax rally here that's going to take us up to the resistance levels I've been talking about. And just the point I was making about the tariffs is, again, we keep being told by the media, we're going to have this big trade war, all this inflation. I was trying to point out, again, with Colombia, well, the tariffs, the emergency tariffs, they got rescinded. They're gone. The issue got resolved in 10 minutes. The tariffs with Canada and Mexico, they've been delayed. That issue got resolved. They made concessions, as I told you would happen. So again, the only thing in focus right now at the moment is China. But again, this delay with the tariffs with Canada and Mexico could be an issue going forward as we get the next big rally. We'll be watching. Now, again, told you we were going to bottom with the election gap. We're going to fill that gap and hit the trend line from the 2023 low and get a rally. I told you everybody was saying we had a bearish head and shoulders. I told you that it was a fake pattern and that it was evolving into a bull flag. We saw the breakout of that ahead of Inauguration Day. I told you the gap fill from the election gap was a continuation of the election rally. And I think it's going to take us to our trend lines, and then we're going to see the market reverse and usher in the bear market. Rally, I told you we moved slightly higher above the peak. I told you we were going to get a pullback and back test at some point. We've now done that. Now the question now is it done? We had two things causing the sell-off. We had the deep seek sell-off. We went back and we filled the deep seek gap at 6101. We formed a bear flag on Friday. White House press secretary confirmed that the tariffs were going to go forward on February 1st, and the market sold off with that. After filling the gap, it was a gap and trap, and we then gapped lower on Monday with the tariffs on concerns of a trade war, concerns about inflation, and all the rest of it. We've come back to fill the tariff gap. So we filled the deep seek gap, and now we're coming back and filling the tariff gap here. We did fill it today ever so slightly there at 6,040. We'll be watching to see what happens now. Do we still go back and try to fill or try to get a bigger Fibonacci retracement? We did fill the gap over here that I talked about, which was the breakout gap from the bull flag. We still have down here the CPI gap here at 58.43. So we'll be watching that. And that's just below our 78.6 Fibonacci at 58.49. So just going to be watching some of these levels. But again, could go back and test these lows, get a higher low, or get a lower low and come and hit this trend line again. Or again, if we blow past it immediately, we can move into the golden pocket and get a deeper Fibonacci retracement. We can move towards the CPI gap fill in the 78.6 Fibonacci. Again, if we fill that gap later, we might find support at the 61.8 Fibonacci should we take out this low. And again, I'm not sure that we do, but I think that the risk of that on the 60-minute charts, as I've talked about yesterday, still may take out that low. As I told you, we still may take, I told you it over and over. I didn't think that was a low, and I told you we were going to take it out. Here, I'm telling you, we're likely going to see a pullback to establish a higher low or get a lower low, and then I think you're going to resume the advance. But I don't think you're taking out the January low. And I do believe that this is just a pullback and we are going to resume the advance. But I'm watching these gaps, I'm watching these Fibonacci levels, and then I'm watching also some of the horizontal support and our VWAP support. Let me just show you my other chart here, and I've got some of these levels marked on that as well. Here I have it on the daily chart, and again, this is our VWAP support. Remember I told you the VWAP support and the horizontal support levels were coming into play. We're just above this horizontal support level from the November level, and I told you to be watching the gap fill and the trend line from 2023. We bounced off those levels in this VWAP support right here. We rose up here and had our breakout, and if we do get a bigger, and here you can see we're on the daily chart, we're filling the tariff gap, the tariff sell-off gap here at 6,040, and if we do end up selling off further, again we can hit this trend line again, or if we take our time hitting it, maybe go down and take a little bit longer reaching it, or just reach it right here and be done with it, or plow on through the 61-point Fibonacci and gap support, and maybe try to fill this other gap down here, our CPI gap, and hit our 78.6 Fibonacci. So watching to see how this is going to unfold, but again, we've had a big move up, predicted the bottom, had a big move up. I'm of the opinion that this low is going to hold and that we're going to get a higher low. Now, again, let me be clear. We've now back tested. I told you we were going to. We didn't do it over here. We did do it over here. That may be it. I told you we were going to fill that gap at 59.38. I told you we were going to back test. We've done that. We didn't quite reach our 61-point Fibonacci at 59.09 right here, and we may end up doing that. So again, watching these support levels. Here's the golden pocket right here, 61-point fib at 59.09, and 58.49 is our 78.6 Fibonacci. Our gap fill is just below it at 58.43. So again, just horizontal support right in here. There's good horizontal support at that gap fill area just below our 78.6 Fibonacci. The golden pocket is key support. Our trend line of the upper boundary here of the bull flag is support. Should we try to take this out? We'll be watching. Now, Bitcoin is kind of leading the market right now, and it's selling off. Right now, it's down nearly 4.5%. Well, the S&P rallied up today. Bitcoin already did yesterday and filled the gap, the tariff gap, and it has now sold off. So I expect S&P is probably going to sell off and follow Bitcoin. If you look at the Bitcoin ETF, it's very, very close. This whole thing, if you look at the 60-minute chart, the S&P and the Bitcoin ETF IBIT, they're identical, nearly identical. They have discrepancies. It seems like right now, at the moment, the S&P is following Bitcoin's lead with the IBIT ETF. Fascinating. And here's a 60-minute chart of the S&P. I've talked about this just a moment ago here. We've got IBIT. It's very similar. Now, S&P is trying to fill this gap right now today. We did fill it ever so slightly there. Bitcoin did it yesterday with the Bitcoin ETF, and it's selling off. S&P and Bitcoin, they both had the head and shoulders that evolved into the bull flags. They both bounced off trend lines. They both bounced off support levels. Look at this chart, and let me show you IBIT. You're going to be amazed at how similar it looks. Look at this. Keep in mind the bear flag up there at the DeepSeek gap fill up there, and the rising wedge and all the rest of it. Check this out. And Bitcoin is currently having a positive correlation with the S&P. This is the Bitcoin ETF, and very, very similar. Again, here we had them both bottom on the 13th. When I was predicting that the S&P was going to bottom and rally, I was predicting the same thing for Bitcoin. They both had the bull flag, a little bit nicer shape on the actual Bitcoin daily chart, but here on the 60-minute chart, again, the run-up, a rising wedge, just like the S&P. This breakdown, we had the gap lower here with the DeepSeek sell-off, came back up, filled that gap, the DeepSeek gap right there, and the bear flag, just like the S&P. It broke down. On Monday, we had that gap lower with the tariff sell-off, the concerns about the trade war and about the tariffs and inflation, and then the Bitcoin ETF IBIT rallied back up, and this is a 60-minute chart, rallied back up on Monday, filled the gap, and then on Tuesday, with the trading session we have right now, it gapped lower. So it already filled the gap on Monday. The S&P is doing it today. The S&P is doing it today. So does it continue to follow Bitcoin? And this is the Bitcoin ETF. It seems to be they're very, very similar. Could we be getting a divergence that's developing on the RSIs in the more recent price action for both with our lows from the tariff sell-off there on Monday? I'll be watching. And if we do we come back down and again reach this level? Now we have the gaps that I talked about on the S&P 500. Fibonacci retracements 5909, and then we've got that CPI gap fill lower in the 78.6 Fibonacci. Here's a gap I'm watching at 5322, but again, just going to be watching. Now, again, maybe we bottomed and we just get higher lows, and maybe that's the end of it. But if there is more volatility in the stock market with earnings, concerns about the tariffs with China, and possibly maybe the jobs report come Friday, we'll see, or economic data, we'll be watching to see. But I think that, again, we're going to get higher lows with both. I don't think the January 13th lows are going to be taken out, but pretty interesting. And again, why I'm talking about Bitcoin is because, again, it has a positive correlation with the market. As Bitcoin follows the S&P, but right now it seems like the S&P is following Bitcoin. Previously, S&P peaked on December 6th. Bitcoin went a little bit higher and then peaked shortly after that, surrounding the NASDAQ. Mid-December. So it was following the S&P. Now the S&P seems to be following Bitcoin. We had this positive correlation, which is kind of interesting to watch. So again, I'll be watching. Do we take out this low on IBIT, or do we get a higher low? And again, Bitcoin selling off a moment ago. I looked at it, was down nearly 4.5%. Let me just show you the bull flag on that real fast, and then we'll move on. It's pretty amazing. This is Bitcoin's VWAP support and horizontal support and resistance levels, very similar to the S&P 500. If you're interested, I'll link my latest Bitcoin video at the end of this one if you're interested in looking at more of the Bitcoin charts. Just real quick, Bitcoin's down 4.28% at the moment. It got that bottoming tail. We had sold off sharply. We dropped, Bitcoin had dropped 6%, got a bottoming tail around the 100 period moving average. I talk about the S&P and Bitcoin both trying to find support around that 100 period. It rallied up, and then it ended up positive by 3.87%. So it had nearly a 10% swing on it here, down to the lows and rebounding back up, but it's stalling at the 10 and 20, the 10 period and the 20 as they get the crossover. Bitcoin is turning off the 10 period moving average at the moment and getting this drop of right now 4.20%. So could the S&P follow suit? Now, Bitcoin did take out the 78.6 Fibonacci. I don't think it's taken out the January low myself, but again, you start losing these 100 period moving averages, then both Bitcoin and the S&P is in trouble. Now Bitcoin is down over 4%. Could the S&P join it and have more volatility? I think the Bitcoin's either going to test this level or slightly take it out. And again, sometimes that happens. Again, S&P is filling that gap at 6,040. Bitcoin already did. The Bitcoin ETF filled that gap from the tariff sell-off that we had on a Monday. Again, we'll be watching. And if we do come back down, again, do we come back down into the 61.8 Fibonacci and is that the end of it? Do we just move slightly lower and maybe do that, or get something a little bit deeper? But I don't think that we're taking out the January low, and I do think that, again, that this is an ABC move. It may not be done yet. It could be that it's still under construction and that we get another reference point here of a divergence or a confirmation of a higher low. So again, it's possible this is the low, but I'm just telling you, we still can hit our 61.8 Fibonacci or move into that golden pocket, as I've talked about in the other on the other chart there, and move to try to fill the CPI gap. I don't know that we move that low, but again, I think that we will establish a higher low. So we'll be watching. Do we confirm a higher low with this next sell-off that I think we're likely going to get, or do we get a larger divergence? And if we get the divergence, it's likely going to mark the bottom with a triple bullish divergence there. Here on the 60-minute chart of the S&P 500. Now MACD is turning back up, and again, you've got this possible divergence now complete here. So again, if we can continue to rally, if we getting some kind of pullback and it's just a higher low, then maybe this low can hold. Again, I was predicting a pullback. Well, I told you I didn't think this was a low. I think this has a shot of being the low now, but I need to see more evidence of that. Again, The market is probably going to follow Bitcoin, but the MACD is turning back up here. So we'll be watching to see the impact of earnings with tomorrow's trading session. We'll be watching to see if there's any more jitters about the tariffs and tensions with China, between the U.S. and China. Just some things to be paying attention to. But again, in the pullback, as I predicted would happen, I think we get a higher low, and then I think we'll resume the advance. So I'm going to be watching closely for clues. Is the bottom in here? Our 50 still above the 200, but again, Bitcoin's turning off the 10-period moving average. The S&P is just below it in the daily time frame. Now, it didn't reach it as Bitcoin did, but it's directly under it. And if we do go a little bit beyond the gap fill area and stall up at 10-period, you may just do what Bitcoin did and turn down off of that 10-period moving average. That's that red line you see right there. We had the bearish reversal of conditions with momentum here with that sell-off on the tariffs on Monday, and now we're rebounding back up to fill the tariff sell-off gap. We did that today, but you got to be able to flip the cloud back to green. You got to flip the bars back to blue. We're still on a sell signal here, dropping below the cloud, and we're still below the 10-period moving average. So again, the risk is that we come back down. Again, our 61.8 Fibonacci could see it reached here, coming back and hitting this trend line again, or even getting something uglier. Again, our CPI gap fill, our 78.6 Fibonacci at 58.49, as I mentioned. Momentum here is still bearish at this point, even with today's rally. Got to see that change if the sell-off is over, if the bottom is in. So we'll be watching. Could be another test of this low to either take it out and get a lower low and complete bottoming process, or to establish a higher low. We've got the 10 above the 50, the green line. The 10 is a red. The 20 isn't quite there yet. We could see a bullish realignment of the moving averages and still pull back and then resume the advance. If we get a bullish realignment of the moving averages, that would be a positive thing for the S&P 500. I think we're establishing wave 2. Now, as we're pulling back, the S&P is bouncing off this trend line right here, the upper boundary in the daily time frame. Again, if we do push back, we could hit our 2023 trend line again, which is intersecting with this upper boundary. And again, that would be closer to our 61.8 Fibonacci. I think that's very possible. And hitting our 100 period moving average. We didn't quite reach the 100 period. We could reach and tag this trend line again. This trend line is the 2023 trend line, which I warned you we were going to fill the gap at the election rally gap, and come back and hit this trend line. This was back over here. Here's the election rally gap over here from the election. Came back and we filled the gap. This trend line, could we reach it again over here? So again, that will be interesting to be watching. And if so, that's major support. If we hit that trend line again, it's likely over. And we're going up here to this other trend line here. And again, this could be pushed forward a little bit. If we take our time and get a bigger pullback, then it would be more like this. Again, the target could rise just a little bit. The trend line is a target, not a number. But again, I expect that we're going to have a wave 3, a 4, and a 5 that's going to carry us to new highs above our January peak right here. And then I think you're going to see a top. And again, we're buying more time with the tariffs. That's not an issue a few weeks from now, but maybe it is. Maybe it is 30 days or 29 days from now. It becomes an issue again. We'll be watching. So far, the media is going off, warning us we're going to have this massive trade war. And so far, seen the tariffs rescinded with Colombia, the emergency tariffs, and we've seen the tariffs with Mexico and Canada delayed, using it as a bargaining tool. That's what he's doing. We don't have a trade war. Now we'll see what happens with China and their retaliatory tariffs, and we'll be watching how this all unfolds. If it unfolds, I do think there will be an inflation scare at higher levels, and maybe some tariffs end up happening. We'll be watching. China's tariffs have not been rescinded or postponed yet at all. I think you get an inflation freakout, but again, the tariffs don't cause inflation. Markets' fear about the tariffs are misguided. A big rally on NASDAQ today, 1.26%, 269 points higher, but momentum is still bearish. We still have a bearish reversal of conditions, going back and filling the gap, just like the S&P 500. Testing our 10-period moving average, signals still remain bearish. The awesome oscillator did turn green today, and it's in positive territory, so we'll be watching to see what happens. Can we flip momentum back to bullish, or do we go back and test? The risk is with the NASDAQ is that we come back and we fill the CPI gap, which would be right there, the CPI gap, and it has stopped making new highs, which again, there is that risk that we come back and end up filling the gap from the election rally, which we have not filled on NASDAQ, 20,227, should we take out the January low. So we'll be watching the NASDAQ. If it does get if we do see a tech sell-off, which again, we could see a sell-off with tech stocks and the market still, the Dow and the S&P still rally to new highs, we'll be watching this gap here. Where does that January low hold? I'll be watching closely. We may get a higher high with NASDAQ, but I am uncertain if it will be able to do so in its history of diverging with the S&P 500 at major tops. The NASDAQ 60-minute chart did not move to a new low. The S&P did. We did not take out the deep seek low right here. We were just slightly a fraction above it there. Do we still end up taking it out? You have this gap right here that we can still fill and still hold above the January low. But if you end up taking out that January low, you've got that election gap fill. That election gap fills at 20,227. So again, do we confirm a higher low here and that's it? Or do we end up seeing the RSI turn back down and end up forming a divergence? And if we do, does the January low hold? So I'll be watching that with the NASDAQ. Does the January low hold if we get a bigger sell-off? And we'll be watching to see how it unfolds tomorrow with the AMD earnings, with the Snap earnings, and with the Alphabet earnings. Now, NASDAQ going up to fill that gap. Again, we filled the deep seek gap up here, but we didn't move to a new high. The S&P did. I'm watching the trend line right here. So again, if we do come back down, you got this trend line directly below here. You've got the gap fill right here, just below that. So again, just some things to be watching. And the January low. If we take out the trend line, when you take out the January low, you got the gap fill from the election down here in the 200-period moving average. I have a channel drawn here. I'll be watching to see if this forms a higher low. Now, could it be the S&P goes lower and NASDAQ gets a higher low? Sometimes they diverge. If NASDAQ is going to make the attempt to go to higher levels, we'll be watching for clues. At that monthly topping tail in December, so far that high is holding, and I'm watching to see if that candle will eventually end up being confirmed as a top. It's certainly possible, but it has to have confirmation and a follow-through. So far, we don't have that. Going sideways, like what we did in November, December, going into the S&P's January high, NASDAQ's been going sideways. So we'll be watching this closely. If you do get a bigger sell-off, watch our recent low here from the deep seek sell-off, and then watch the trend line and our January low. If that's the case, we'll be looking at our gap fill there just under the 20,800 area.